Great, fantastic. Before I start, I want to ask you guys a favor. I'm going to do a little quiz. Just have that on. Who likes a little quiz? Yeah? Come on, we can try a bit at it. Everyone up for a quiz? Yeah. All right, let's get back those slides up, guys. So the first slide is, let's get that up. Oh, I got to press forward. There we go. So, who said this? If you guys know this, just say it out loud, okay? Just, not Gordon Gekko, no. Be fearful when others are greedy, and be greedy when others are fearful. Who said that? Warren Buffett, well done. Who is Warren Buffett? Yes, he's the world's richest share investor. Okay, remember his name, by the way, because I'm going to come back to this guy in a few moments. So what we're going to talk about today, guys, we're going to talk about how to profit from a crisis, all right? So that's what we're talking about. Okay, who said this? Okay, second question. Who said the way to make money is to buy when blood is running in the streets? By the way, last time I came to Manchester, I asked this question about a few months ago. Someone said in the audience it was Dracula. It wasn't Dracula. Now, what do you guys think? I'll give you a clue. It's supposedly one of the guys, one of the families, the big families in the world who controls the world. It's not the Rothschilds. Who do you think it is? Not quite. It's Rockefeller. Oops. Sorry about that. I think the way this presentation is done is a little bit skews up the screen. Anyway, yes, the way to make money is Rockefeller. He's an American oil tycoon, supposedly one of the guys who built America. All right, I want to explain to you what I actually meant. And you might be thinking, well, is it even moral? Is it a moral thing to profit from our next crisis? I think of it like a hurricane, coming towards you. Famous one in 1987 came to this country. There's plenty of hurricanes coming to America all the time. And, what do you do if a hurricane is coming to your destination, where you live? Well, the first thing, I'm sure you agree with me on this, is that you protect yourself, protect your family. All right? It's about being prepared. If a financial storm is going to come, and there will be another financial storm, by the way. The next financial storm that comes, most people, I would say 90% of people, are unprepared. Would you agree with that? Yeah. In 2008, so many people lost money in stocks and property because simply they got stuck in a bubbles phase. They were in denial. Anyway, so I want to share with you a big, major lie. This is a lie which I can tell you almost every person that you know believes in. You might believe in it too. I used to believe in it. And it's not your fault if you believe in it because, let me say this lie is perpetrated by the media. Remember this, by the way, guys. There are two types of information. There are two kinds of information. Information for the masses and information for the classes. Okay? It's what you want to know is information for the classes, not what the media are saying to you. Because the majority of the stuff the media tells you is completely wrong and useless. Here's the lie. If the economy is doing better, so the stock market should do better too. By the way, if you ever hear any person, any economist saying those words on television, you know he doesn't have a clue what he's talking about. It's actually the opposite. You might think that's a bit strange. Why would that not be true? Okay, let's talk about that. Fact is, guys, there's no correlation between the economy and the stock market. None whatsoever. Let me show you. Warren Buffett, again, world's richest share investor. He doesn't even care about what the economy is doing when he buys stocks. He doesn't pay attention to things like unemployment reports, interest rates, housing, all that kind of stuff. Peter Lynch, most famous top money managers in the world. He says if you spend 13 minutes thinking about economic forecast, you've wasted 10 minutes. Let's take a look at the crash, the 2008 crash. Take a look at this. See the market going down. In the year 2009, you guys remember 2009? Yeah? What kind of news stories were you hearing on the radio? If you switched on the radio or television, what were you hearing all the time? Was it positive or negative news? Negative, right? Exactly. All you hear on the news and television was fear, recession, depression, negative GDP, unemployment, low earnings. Guess what? Everybody hated stocks in 2009. Everybody. Almost everyone who was afraid were dumping their stocks and shares. Blood was on the streets. But at that time, insiders, remember guys, are the people, not the masses, but the classes. Right, the classes, the insiders were buying. Take a look at this. At the peak of unemployment in 2009, stocks went up 60%. That's a bit strange. 60% up, and unemployment is at the peak. So what's really going on, guys? Why is it that a good economy doesn't necessarily mean you'll have good stock prices? Why is a bad economy or a crisis the best time to start buying stocks? So here's what's going on. There are about 20 funds. By the way, guys, out of all the slides I'm going to show you today, this is probably the most important one, so pay attention to this one. What's really going on, guys, there are about 20 funds that can basically do 80% of the world's trading. These are the funds, these are the big guys who control the world, like Goldman Sachs, JP Morgan Chase. These are the guys who make the big decisions what happens. And it's not whoever party we vote for. I've never voted. And here's the thing. They have between 50 to 100 billion dollars under management. Now just remember that. These guys employ the smartest people in the world to do all the number crunching. These guys are more smart than the government. These guys know, based on their statistics and based on their number crunching, what will happen next. So if they think that the reports that they have, the data they got, again, remember guys, these are insiders. If they believe that all the facts and the data show that markets will go up and it's a good time to buy, they will start buying. The question for you is, well, how do we know when these guys start buying? And by the way, I want to make sure you guys understand this, that when we buy, we're not buying junk. We're buying quality stocks, not junk stocks. Most people, by the way, probably people you know, friends you know, they buy mostly junk, like penny stocks, which most of them are garbage as well. I don't know if you guys are car enthusiasts. I'm a big car fan. Let me ask you, if you had a choice between a Bentley Continental and a Kia Ceed, which one would you choose? Who goes for the Kia Ceed, just out of curiosity? All right. Bentley? Yeah. I know you're probably thinking, the most common objection I get at this point is, well, hang on a second, it's not even realistic. Bentley cost over 100 grand, over 100,000 pounds. True, but imagine this. Imagine if tomorrow Bentley Motors, which is used to be a British car, by the way, owned by Rolls-Royce. Imagine tomorrow they say to you, you know what, tomorrow we're going to have a 75% sale. Who'd be interested, just out of curiosity? Yeah, absolutely. Same with Mercedes, whatever car you like. Tomorrow they say we're going to 70% discount. Great, I'll buy a discount. But what is a quality business? A quality business is basically solid earnings growth, undervalued, they're cash rich, they've got low debts, and they've got growing sales. Companies like these. Now, whether you like them or you hate these companies, bottom line is all these companies like Apple, Microsoft, Intel, Coca-Cola, Caterpillar, all of these qualify for quality companies. They all have these kind of values, what I'm showing to you here, okay? And there's plenty more, by the way, plenty more stocks people have not heard about, which we buy as well. Now, so the next point is, when do we buy them, okay? We buy them when nobody else wants them, okay? Remember that. We buy these stocks when they're hated, when people are afraid, and when stocks are unpopular. Let me ask everybody here a question. So when do you think is the most important time when people would be hating stocks? Yes, a recession or a financial crisis, absolutely. Again, here's the thing I want you guys to understand. When that happens, there'll be blood in the streets. Remember what Rockefeller said? Okay, all that means is when people are afraid. But here's a warning. Even though this sounds simple, the hardest part is the psychological part. Because why is it so? Here's the thing, guys. To invest successfully, you got to do the psychologically impossible. That means buy when everyone is afraid, sell when others are excited with greed. Thank you very much for having me. Appreciate it.